Unemployment is up 20% year over year in Canada. Vancouver has not escaped that trend either, where we've seen unemployment in the highest in the past decade outside of the pandemic. Not only that, we have mortgage renewals coming up at record numbers in both 2025 and following in 2026. And then we've seen an increase in listings on the condo side in Vancouver, the highest amount of listings since 2009, and the highest amount of listings overall in Vancouver since 2012. So where is this data taking us? Where do we think the market's going to go? There's so much turmoil. The tariffs, are they coming in? Are they not coming in? So let's look at the data. Let's go into the details here so that it's not a matter of interpretation, but it's a matter of data so that we can prognosticate what is going on in this Vancouver market. And I'm going to bring up some of the data from Vancouver as well. The detached market, if you've been waiting to get into the detached market, there are some massive soft spots across Vancouver right now. So I'm going to show you exactly where the buyer's best bets are, the seller's best bets are, and then we're going to front load it with a bunch of data interpretation here so that you can make the best decision on where this market is going. So let's jump into these unemployment numbers that we are seeing here across Canada. So I'm going to pull up my screen here. We're going to share some of these things here. And what I want to show you here and what is a cause of concern is not just the unemployment as a whole, but unemployment on the long-term effects of that unemployment. So we have a couple charts here that are highlighted here in blue, and you can see number of workers unemployed for 27 weeks or more on the left hand side here, and then number of workers unemployed for 52 weeks or more on the right side. And you can see that the most recent data point here is January of 2025. And you can see that on 27 weeks or more, this has been the highest mark in several years. And it's been pretty much a straight pull since July of 2023. Same amount of time with this for 52 weeks or more. So that is going to have an effect on the marketplace as a whole. Granted, this is on a macro level across Canada, but Vancouver is no different. And as we scroll down here to the next portion here, we have Toronto on the left-hand side, Vancouver on the right, almost identical traction in terms of the graphs. And you're going to see that the data between the two are very similar. But one thing that I'm very thankful for, we're not having as much of a condo crash here in Vancouver as opposed to the Toronto market. There's a lot more issues that are plaguing the Toronto market. Just ask my friend Mike Carpino back out east. There's developers defaulting en masse. It's similar to in Vancouver here. There are some developers that are starting to jump ship, but it's happening in much greater numbers back east. And they also have some different rules when it comes to condo pre-sales back east in comparison to Vancouver. You may have heard the term of phantom rent. So essentially in some of these pre-sale contracts in Ontario, you have to complete on this unit even before there's an occupancy permit or you can move in. Once the project is done, it is your responsibility, and then you will have to rent back that space to the developer and pay a monthly rent even though you can't move in and you can't get your mortgage. Here in BC, that cannot happen. You can't get your mortgage until there's an occupancy permit, and you cannot take control and possession and make payments on that project until it is completed. So there's some differences between the two pre-sale markets. I'm not an expert in Toronto, but that could be some of the concerns that are plaguing a lot of people back east. But as we see here, you have this spike here during the pandemic on the Vancouver side. But this is the biggest amount of unemployment that we've seen, and it is going to contribute to housing. Both in the rental stock, if you're an investor, if people are losing their jobs, and we've seen a real crash in terms of the rental market here, 10%, 20%, depending on where you're located. I have clients that have been having vacancies in the rentals for quite some time. Myself, I'm on Vancouver's east side. I had one of my units vacant for 2 months, and that's the first time I've ever seen that since having my rentals. So these are factors that we are looking at, and they are going to obviously impact the market, not only in terms of purchase power, but also rental. If you're an investor, these are things that we definitely need to look at when it comes to this Vancouver unemployment rate as well. And this is something that can contribute to amount of these listings coming to market. If all of a sudden you've lost your job and you own a rental property, or it's just your main principal residence, you are starting to have some difficult decisions on what to do financially. So that can be a reason why we're seeing these inventory numbers, and we'll go over that a little bit later, how we just saw a spike in January. There were several months, 3 straight months of inventory drops, and then in January we saw a huge uptick when it came to that inventory. Let's jump into the next chart here, and this is sourced from the CMHC, and this is mortgage renewals by year. And you can see here in 2025 and 2026, these are the record numbers of renewals that are coming up. Everyone who had the benefit of having those sub 2% mortgage rates or just low 2% mortgage rates are going to have to come to terms with the landscape right now of more than doubling what your interest rate are. And that could be a combination of why we're starting to see some of these listings coming upwards as well. If you think that you can't make your payments when your mortgage renews, you got to get those listings on market. And especially if you're an investor, and I've been selling a lot of investment properties, and people are having issues with their finances. And if you are not going to be able to make it as is, and your interest rate's going to double, this is a chart that we're going to watch. And it's going to be very interesting to see here in 2025 when there's about 23% of mortgage renewals are going to be coming up here this year and how that's going to affect the market. Another reason, we've also seen 210,000 housing completions this year across the country, and that has led to an influx of inventory as well. And my next video that we're going to go about, yes, we've been seeing peak construction and peak and high levels of construction closings, but we also know that permits are on 40, 50-year lows, and there's going to be a housing shortfall, but that's going to be in the next video that we're going to dive a little bit deeper in. So let's get into these January numbers and these listing numbers specifically to show you what's going on. So we have the chart here, and again, on the left-hand side is going to be Toronto. The right-hand side is Vancouver, and they're very, very similar in terms of the data. But when we pull up Vancouver here, you can see that these are Vancouver non-seasonally adjusted new listings as a whole. These are all categories. And here in 2025, you can see that this is the highest level of listings that we've seen since 2012. And that is something to keep in mind moving forward, especially if you're a buyer. That is something that you're wanting to hear. We're having an influx of inventory. If we're having an influx of inventory, not enough buyers to pick it up, it means pricing is going to drop. There's going to be soft conditions, and we're going to jump into this data on Vancouver's west and east side. I'm going to show you exactly the areas to focus on, especially in that detached market. Then when we pull over here to Vancouver condo new listings, we can see here that in 2025, that this is the highest level that we have seen that goes back actually before 2005. These are the highest numbers that we have on this chart in the last 20 years, which is insane. So I know for myself, a lot of my condo buyers have been lucky. We've been able to get them on market and sold quick, but there's a lot of listings that are starting to drag on. And that's why it's really important, if you are coming to list, you need to be priced very, very well. You can't have high expectations, because I can guarantee you it will sit. I have listings that we've just had to adjust the price on, $800,000 condo by $20,000, which shouldn't be enough not to have a buyer put in an offer and negotiate on, but we stayed stagnant. As soon as you move it $20,000, $30,000, all of a sudden the market picks up and the unit moves. So you need to be priced really well. And then at the end of the day, you need to make sure your property is being marketed to the most amount of people as possible as well. If you're just putting it on the MLS and wishing for the best, your property is going to sit. You need to have that attention. So these are some of the things here that I am looking at when it comes to 2025. And this is definitely not where I thought the market was heading. I thought we are going to have a continued reduction in inventory, especially in January, because seasonally, the market is a lot slower. So I was pretty surprised to see these numbers come up and pop so high in January. But when you look at some of this other micro and macroeconomic data, such as unemployment, such as mortgage renewals, then you can start to see why these things are happening. And that's why it's so important to have information provided to you as a consumer and as your agent to understand what's going on here in a national level, because it really helps you prognosticate what is the best move to make for you, whether you're looking to buy or to sell. So let's get into the numbers here so you know exactly where you need to transact, whether you're a buyer or a seller. So I'm going to show you some really good opportunities here, starting on Vancouver's east side, which we know has been so competitive the last couple of years, whether it's the detached market, the attached market. But why I want people to get into the detached market so badly, especially when it's soft like it is right now, is because of all these land use changes in the province. They are not making any more single family homes. They are tearing them all down, building multiplexes, duplexes, triplexes, fourplexes, apartments, land assemblies, and bringing it all down to the ground. There is always going to be a segment of people who want to live in detached property. So if you can wrap that up, they're going to go extinct, and you can have that dirt and that title to that dirt. It's going to be very valuable for you and your family and your financial portfolio. So on Vancouver's east side here, we can see it at 7%. That is strong buyer market conditions. Anything below 12% is buyer market conditions. Between 12 and 20% is balance, and above 20%, it means it's seller market conditions. What does sales ratio mean? It means for every 100 homes, between 12 and 20 are selling. That makes it balanced market conditions. Here on Vancouver's east side, only 7 out of 100 homes are selling. And that's why you see this inventory of 453 to 30 sales. So looking at the data here, we see that outside of Southwest Marine, where it's 50% in seller market conditions, but there's only 1 sale and 2 actives, for the most part, we are in low single digits. There's been a lot of areas that didn't even have a sale in all of January. You look at places like Grandview Woodland, 32 inventory, only 3 sales. Renfrew, 57 inventory, 4 sales. These are areas that you want to exploit. Renfrew Heights is sitting at 2% sales ratio. That is very, very low. Collingwood is 3%. Little different area here in Collingwood, just because a lot of these are land assemblies. So take that with a grain of salt. They're trying to, have these obnoxious price points on their homes that developers are just not willing to pay right now. But anywhere, you look at even places like Mount Pleasant, which has always been very competitive to purchase into. Not 1 sale, 11 inventory. And Grandview Woodland, 32 and 3. That's always been a popular place. Fraser, where I live, has always been in seller market conditions for pretty much the last couple years. 17 inventory with just 3 sales. So you definitely want to look at these items here when you're a buyer. If you're a seller, if you're still in that Fraser area, in Killarney, you still are doing pretty good. Strathcona, not a lot of data, but it is still quite popular in there. Then we want to pair it with these soft spots in the price point. So we can see that in Vancouver's east side, the most competitive place other than the 1 to 1.25 million, where there's just one data point here, is this 2 to 2.25 million at 14%. But other than that, you're looking at single digits again in the 2.25 range, all the way up to 4 million. Even at this, entry level 1.5 to 2 million, which has always been very competitive, sitting at 10 and 12% sales ratio. So these are things that are really good for you as a buyer to be looking at. Down here at the bottom, and we see this red dotted line, and this is inventory, and this is what I was speaking to more at the top. Since January of 2024, we saw a gradual increase of inventory going from 346 to 601 in September. Then we saw, 3 months with drop of inventory, and then it jumped up again in 453. And we've seen in that time too, over the last 13 months, where the average price point on the detached side, was as high as just under 2.1 million in June. Now it's down to 1.863, and it's been pretty flatlined. So for anyone who's a buyer, best bets between $3 to $4 million in Collingwood, Renfrew Heights, and 3 to 4 bedroom properties. Seller best bets, selling homes in Fraser, Killarney, up to 2 bedroom or 5 to 6 bedroom properties. This is where you're looking at, but if you are looking detached, the Vancouver east side market is very, very strong. If we jump over to the attached market on Vancouver's east side, you can see it's a much different story. It goes from 7% to 19%. Very strong balanced market conditions, starting to get into those seller market conditions. So as an upsizer, this is what you're looking at. You're looking at, where can I get a really good price point for my home and jump into the next category, which would be the detached market, where I can not only get a great number on my sale, but I can make the money back on the difference in the price point. And this is what you're seeing on Vancouver's east side. You can see some crazy numbers here when it comes to, Victoria, 62%, Renfrew, 45%, Renfrew Heights, 50%. Not a lot of options. Ones that have a little bit more data points, Collingwood sitting at 27%, seller market conditions, 78 inventory, 21 sales. So pretty much anywhere you're looking on Vancouver's east side, you are in a little bit of a dogfight. Again, on the price points, sitting at 19%. So when you pair all this together, no matter what price point you're looking at or area, it is competitive right now on Vancouver's east side. We've seen that pricing has jumped up a little bit. We did have this spike in inventory in January, but that has not pushed things away. We're pretty much on a flat line over the last 13 months in pricing. Keep in mind, this is attached, so this is both condos and townhomes together, but pricing has held pretty firm there. Buyers best bets between 1 million to 1.25 million, up to 2 bedroom properties. Seller best bets, selling homes in Champlain Heights, Renfrew, Victoria, and minimum 4 bedroom. So obviously if it's a minimum 4 bedroom, you're looking at a townhouse or a duplex. Moving on to Vancouver's west side, on the detached market, again, super soft, sitting at 6%, even lower than Vancouver's east side. And the west side has had these huge run-ups in terms of price point. We saw that it got as high as 3.782 or 3.79 in August, and now we're down to 3.2. So almost a $600,000 drop in the average price point from August to January. So there is some softening in this market for sure. There are some areas that are a little bit more competitive, but there's not a lot of data in there. Mount Pleasant, 5 inventory, just 1 sale. Fairview, 2 inventory, 1 sale. But if you look at some of these other areas that are doing just not great at all, Mackenzie Heights, which is popular, 6%, 17 inventory, just 1 sale. Marple, 7%. Point Grey, Kilchina, 5%. Look at Shaughnessy, 67 inventory, 1 sale, 1% sales ratio. And then University is sitting at 7%. So there's a lot of opportunity in here if you're looking to live on Vancouver's west side. If we look at price points, we can see here, and that's why I like these analytical numbers here, it breaks it down by $250,000 to see where these soft spots are. We can see that anywhere from 2.25 to 3 or to 3.5, you're in some competition here. But when you jump down into that 3.5 to 4, you're back down into buyer market conditions at 6%, and then you get above the $4 million mark, you're in 2% and 3% respectively. So, you pair some of these areas in these price bands, you're going to have some good opportunity for a good purchase. Moving down here, we touched on the price point. Average price on Vancouver's west side, $3.2 million. And when we look at buyers' best bets, $4 to $6 million in Shaughnessy and minimum 5-bedroom properties. Seller best bets, selling homes in Southwest Marine and 3 to 4 bedrooms. And then following that up with a quick condo and townhome update, doing a little bit better, but still in very weak balanced market conditions, starting to trend in buyer market conditions here in the community of Vancouver's west side. You have areas such as, Kitsilano is always going to do well. That's seller market conditions. Fairview, always a strong market, 19%. But other than that, Kilchina is 25% too. But other than that, you're sitting at a lot of single digits. Cambie is just 7%. False Creek, which is Olympic Village area, sitting at 15%. South Cambie, 4%. So you have some options here. And then in terms of price points, it's all pretty much balanced market from 400 all the way up to 1.75. You do run into some very strong competition in this $900,000 to $1 million mark. But as you get above 1.75, it starts to drop down to these single digits again. Pricing though has remained pretty stagnant over the last 13 months. The average attached price point sitting at $988,000. Like I said, this is pretty much the same script everywhere. Several months of an inventory drop and then a jump up here in January. And then we can see that seller best bets, selling homes in Kitsilano, Kilchina, and 2-bedroom properties for the attached market. And for buyers best bets, homes between 1.75 and 2 million in South Cambie and minimum 4-bedroom properties. As we wrap everything up here, you can see that there are some external pressures that are providing the reasons why we've had this inventory jump up a lot earlier than I think a lot of people would have. We still don't know the fallout of these tariffs. I'm going to do a video on that as well, but I actually think that the tariffs are going to heat up the market here in Vancouver. I know they are a bad thing overall, but when you look at the cities and the areas in Canada who are going to be affected by these tariffs, Vancouver is very low on that list. And if we do see these tariffs, the Bank of Canada is going to be forced to drop these rates a lot quicker, which means that with some of this pent-up demand that we're seeing, it could ignite some of the real estate. So we'll have to keep our eyes on that. We're going to have to keep our eyes up on those renewals. And my next video, we're going to be jumping on the lack of supply that's going to be coming down the pipeline over the next couple years. Permits are way low. Peak construction has hit. There's been too much of a focus on purpose-built rentals that is taken away from stock from the market here, and there are going to be consequences for that. Thanks for stopping by for this video. Look forward to seeing you on the next one. My name is Kyle Mark, your Vancouver realtor, and whether you're looking to buy, sell, invest, or relocate to my beautiful city of Vancouver, make sure you book that discovery call with me in the description below. Take care.